make sure that you understand what it is, because a lot of it is about being too rich to be poor. You ever been that way? That's how I grew up. Too rich to be poor. Terrible place to be. So if you're looking at the screen here, you can see that I've got the 2022 year tax year, because the tax year is 2022 right now. And the IRS just announced that they're going to start paying the earned income tax credit now, about February 15th, as I'm recording this, to go forward. They weren't paying it until now. So if you're filing your taxes from now after you've watched this video, then you have a chance to get the money. The reason I bring this up is because you can see that if you make $59,000 or less a year and married, and you have three dependents, and it doesn't matter if they're kids or adults or whatever, then you can get almost $7,000. And they also are going to make it retroactive. So my suggestion to you is to make sure that you're looking at this when you're filing your taxes this year, to see, because even if you don't have any kids, you could still get $560 with no qualifying children, which is still money. And it's not necessarily money, it's a credit. But the great thing about a tax credit is that it can reduce your taxable liability, means the money that you would have paid in. And if it reduces it down below zero, then you get the money in your pocket. So that's awesome. So if you can take advantage of this, great. If you can't take advantage of it for this year, but you're close, like look at your adjusted gross income and see if it matches up to this chart. If you're close, my suggestion is, if your company that you work for has a 401k, use the 401k. Save the money, tax deferred for later. And you get the benefit of, if it can bring your taxable income, your adjusted gross income down below the 59 grand, then you're going to get a tax credit and maybe not have to pay any tax and or get a refund. It's such a great thing to have, is that you don't want to make adjusted gross income of $59 or $60,000 in this case and get no tax credit for it. You'd rather have adjusted gross income below this number, keep the money that's in your 401k, and get the tax credit. And whether you pay no taxes, some taxes, or you get an actual check back to you, because even if you paid no taxes, you would still get a check back to you if that was the case. So this is a great thing. You have to look at it, and every year you should pay attention to it. 401k is a great thing to use, but in this case, I would use it strategically. Even if you didn't think you had the money to do it, it would still be worth doing it, putting the money in there, and then being able to get the tax credit at the end of the year and get money that you would not otherwise get. I don't suggest people usually use their tax return as a savings account, because you're giving the government a loan for at least 15 months, before they are somewhere in there, 15 months, about that. But I do in this case, because a tax credit is a tax credit. No matter how much you paid in tax or didn't pay in tax, you're going to get the credit back, and or you're going to get money back to you. So use this as a way to be able to save money in your 401k if you need to, get the tax credit, and get the money back to you so you can use it somewhere else. I hope this has helped, and please leave a comment below on what you want to hear about, and I'll make a video about it. Have a great day.